Ladies and gentlemen, good morning and welcome to day 3 of CogX. And you're here with us at the financial services and fintech stage. So you're in the right place to learn all about the future of fintech. We've got a whole packed program of interesting events today. So please, if you're not already looking at the program, make sure you plan right through till 6 p.m. We've got plenty for you. But we're starting off with a look at the future of open banking. My name's Ben Brabin. I've been involved in fintech for 20 years, running my own crowdfunding business and more recently leading Level 39. So I am very conscious of the fact that this is a very exciting, perhaps the most exciting time in the development of financial services as we deal with so many combined challenges all coming together at the same time. And right at the center of all of that, of course, is the question of the future of open banking. So what better place to start and what better guide to start with than the legend that is Alain Falys, joining us from Switzerland this morning to lead a conversation about the future of open banking. Alain, over to you.
Thank you, Ben. Good morning, everybody. This is my third day at CogX second panel. This is a very exciting panel today on a topic which is important for in Europe, but also in the rest of the world, which is the topic of open banking. The title is a little bit tongue-in-cheek. Is open banking really working? We'll hear from our panelists in a minute. But open banking, by way of introduction, is something that's been around since about January 2018. We are 2 years and a half into open banking, and we've seen things out there. It's not clear to everybody what is actually making a difference in the financial services space, and that's what I would like to ask our panel to clarify for us what advances have been made around open banking. What I've observed is that open banking was very much a topic of compliance more than anything else from the parts of the banks. Compliance to the opening up the data to third parties, and it's become more and more about digital transformation now. So it's a catalyst for digital transformation within the banks. But what's more interesting is what it's going to do for competition and innovation. My name is Alain Falys. I am a partner at Firestartr, which is a seed investor in technology in Europe. Fintech, but also e-commerce. I'm also a payments and fintech entrepreneur since many years. My latest venture is a company called Yo Wallet, which is based in London, which I founded in 2013. Now, I would like to introduce our open banking panel to you. I will start with Andrea Reynolds, who is the CEO and founder of Swoop. Then we're going to have Anna Mitchell, who is the head of marketplace at Starling Bank. We have with us Parth Desai, who is the CEO and founder of Pelican.ai. And we have Jim Wadsworth, who is the SVP for open banking at Mastercard. Welcome, everybody.
Good morning.
Good morning. So what I would like is each of you to introduce yourself and introduce the company you represent. I would like to start with Andrea, please.
Sure. Good morning, everyone. My name is Andrea Reynolds. I'm CEO and founder of Swoop. Swoop is a platform where businesses can source and save money, and they can build their profile within seconds by integrating all of their various data sources, including their bank accounts, cloud accounting software, company's house, credit scoring, etc. And within a few seconds, they can see all of the funding that they can apply for and do so within Swoop. Funding includes everything from loans to equity investment to grants. Through our spend analyzer tool on open banking, we're able to then analyze where they can cut costs and help them switch to achieve that. Everything from banking, FX, insurance, broadband, utilities. And so we're really seeing the power of open banking delivering for our customers.
And when was Swoop founded, Andrea?
Swoop was founded in 2017. We launched the platform in May 2018. And since then, we've been very involved within the industry and the changes that have emerged because of open banking. We're the winners of the Open Up Challenge, which was delivered by Nest on behalf of the banks. And we've also been involved in the BCR CIF funding, where we were awarded 5 million to really start to build deeper into what we are doing with open banking. So I look forward to discussing that with you here this morning.
Thank you, Andrea. Anna, would you like to introduce yourself?
Sure, thank you, Anne. Good morning, everyone. I'm Anna. I'm head of marketplace at Starling. So Starling now has approximately 1.4 million accounts, and that's across both retail and SME. We have approximately 155,000 businesses now banking with Starling, and following the 100 million that we won from the BCR last year, a key focus for us at Starling is building out our business banking products and proposition. Our marketplace is an integral part of Starling's strategy, and it very much leverages our public APIs to incorporate a range of third-party products and services that we consider complementary to the core banking proposition. And it offers these services in-app to our customers, allows them to customize the product that they the banking proposition that they want, and access additional functionality.
Thank you, Anna. Parth, would you like to introduce yourself?
Yes, good morning. I'm Parth Desai. I'm a CEO and founder of Pelican. Pelican.ai has been providing financial payments and financial crime compliance solutions to corporates, banks, and SMEs for the last 20 years. We use AI and natural language processing as key technologies in all our solutions, and we have been successful world over in providing and streamlining operations and new product offerings. In open banking space, also we have been acting for last 3 years. We have come up with an interoperability payment hub for open banking, which allows people to connect to 2,500 banks using any of the popular APIs like OBWG or Berlin Group. And as a TPP, we are also coming up with solutions for SMEs for payments and account information provision. Thank you.
Thank you. Jim?
Thanks, Alain, and good morning, everybody. I'm Jim Wadsworth, as Alain said, and I lead open banking at Mastercard. Hopefully Mastercard doesn't need too much introduction in terms of our card business, but not everybody perhaps is aware we're also a leading provider of real-time account-to-account services through Vocalink, which is actually how I joined the Mastercard firm through that acquisition. As far as open banking is concerned, it's a hugely important topic for us, not just in Europe, but across the globe. Here in Europe, we have some services live, so we have a connectivity offering, providing third parties with access to bank APIs and so on across Europe. We have a risk management tool for banks to help them deal with the risks associated with the new open banking world. We're involved in helping resolve disputes between parties in the open banking ecosystem. And on a global basis, we're our consulting business, the Mastercard Advisors, is supporting banks and others to help them develop their open banking strategies around the world.
Thank you, Jim. So in order to make sure we are on the same level here in terms of understanding what open banking is, Jim, would you mind giving us a short history of open banking and PSD2, which is the pendant for the European regulation, which is essentially the same, with some technical differences. Just give us an overview of why it exists in the first place.
Yeah, sure, I'll be happy to. I mean, maybe a good place to start is a definition of what is open banking. And at its heart, open banking is all about consumers and businesses alike being one way or another empowered to make available access to their bank accounts to a range of third-party providers. Those third-party providers could be another bank, they could be a fintech, could be a number of other entities. And the question then becomes, why would you want to do that as the customer? And that's obviously, if it gives you some additional service, some additional value, provided by that third-party entity that in some shape or form involves access to the data in your bank account, and sometimes also the ability for that third party to initiate payments from your account. Open banking in various forms has been around for a long time, arguably pioneered in the US 10, 15 years ago now. Services like Mint, which is a so-called PFM, Personal Financial Management Service, has been around for some time. Really where this kicked off was with screen scraping based services. Sorry, my phone has just started buzzing, apologies. Screen scraping based services, and that's true in Europe as well. But if you look at the US, which is arguably one of the world's biggest open banking market, a very large proportion of the US citizens are using these sorts of services today. They don't necessarily realize or think about it as being open banking, but nonetheless, that's what's going on. And similar sorts of services, both consumer and business, have operated for quite some time in Europe as well, again, typically using screen scraping access. But there was a very big change, as Alain said in the introduction, driven by regulation, both in the UK and the rest of Europe. UK regulation came into force in the beginning of 2018. And the wider PSD2 pan-European regulation came into force in the second part of 2019, so still very recent. The purpose of that regulation was to do a number of things. Firstly, at its heart, it's all about driving competition and stimulating innovation, but it's also about, I guess, helping create greater security and reliability around that access. So once upon a time, access was informal, driven by things like screen scraping, so customers providing bank account credentials to somebody else and so on, which is not necessarily great. Scraping bank websites, their open banking with their mobile sites or their internet banking sites, not great from an operational reliability perspective. So there's also some things around a move away from those sorts of access methodologies to proper, robust APIs. So open banking is at its heart about access to the data and access to making payments from customer accounts, subject to customer consent. In the European regulatory context, that is facilitated through secure APIs.
And right now, to be able to access this data from a bank, one being a service provider needs to be regulated to do so, correct?
Yes, that's exactly right. So one of the great things PSD2 created was a new lower tier of regulated entities in the jargon, and I'm afraid it's full of jargon. AISPs, account information service providers, or PISPs, payment initiation service providers. So a new lower tier of regulation, trying to balance, therefore, the right level of, making it easy for service providers to take advantage of these new capabilities, but still preserving, if you like, the right levels of customer protection. Now, to be clear, some of the biggest users of open banking are banks themselves. Regulated banks, of course, can take advantage of this sort of stuff, as can e-money institutions and payments institutions in Europe. But the PSD2 also created this new lower tier of regulation. It's a way of balancing accessibility and security.
So what's been successfully rolled out there that is purely piggybacking on the PSD2 open banking regulation? Now we are 2 years into it in terms of the regulatory framework, but as you say, Jim, there's stuff going on since 10 years or so. But in the purest form, open banking has enabled some applications to prop up other. I would like to ask my panel, so what's visible out there? What's using open banking? Andrea?
I think one of the most obvious is the space that we're operating in, which is third-party providers doing what open banking set out to do, which was improve competition, innovation. And actually at the heart of it, it's all about, are we improving customers' lives? And I think from our experience, our proof points, we can say it's a resounding yes. And this is in the very early stages of open banking. So if we're already seeing improvements for our customers, if I give you some examples, on banking alone, business current accounts, This year alone, we've already saved customers over £2.5 million on banking fees. If we look at, say, COVID-19, because of our interaction with open banking, we've reduced the industry average of a CBILS loan application from 5 weeks to 3 days. So you've got practical use cases that are working, and it's all in relation to us leveraging open banking. So, early days, if you think about 2018, the whole conversation was around lack of reliability, stability, of course, delays in releases, etc. And so it was a kind of a negative discussion. We were all in MVP stage. Now we're moving into the area of customer adoption. I think one of the things out of the current situation in terms of lockdown is we've already seen adoption rates go up by 300%. And so I don't think businesses or customers know the term open banking. I'm happy with that. I hope they never know the term open banking. What I want them to know is suddenly they are empowered to get better deals, better funding, instant access to the right services for them. And so what we're seeing is decoupling of bank propositions. So businesses are no longer thinking, I'm with HSBC or whoever it is, and I must do everything with them. What platforms like Swoop enable a customer to do is to decouple and say, who is the best for each area of the services that I require. And so, I would just like to say that I think in the early days, we are in the early days, you hear a lot of open banking bashing. And so I think it's important that we start to talk about the winners in this. If I give you one example of a micro business turning over 100,000, comes on to Swoop, was rejected from their bank for a £25,000 loan on affordability. And within seconds, he starts to see, oh my gosh, I'm losing £7,000 a year on international payments because I've been using my bank instead of TransferWise in this case. Saved him £7,000, and that equals his loan repayments for a year. So not only did we get affordability, but we unlocked repayments. Now, what does that mean for providers in the space, whether you're a bank or an independent provider? For banks, they lost out on that international payment revenue. But what it did was unlock somebody being able to take another loan product where traditionally, in the traditional credit terms, it wouldn't have been possible. So it's a really interesting time. We've been working with banks. The CMA mandated all of the 9 major banks to work with Swoop as a result of winning the Open Up Challenge. And we've seen our relationship go from absolute mandating compliance discussions. Now all of the discussions are on strategically how can we partner together to deliver better solutions.
So the banks are actually starting to embrace the open banking from a strategic standpoint. They're starting to see the strategic opportunities. But your business would have not existed in this form without the regulation being in place. Is that fair?
Correct, absolutely. And it's key to us to have the regulation in place. The first thing that customers ask, particularly the older businesses, is around security. And it's really important to us to have that trust mark of FCA approval to be able to share that with our customers. And I think if we can improve the area of trust, I think we will see much higher adoption rates as we go forward.
I would like to go back a bit later on the sort of the implementation issues and the relationship with the banks. Anna, at Starling Bank, you guys have taken a slightly different approach, it seems, by having your proprietary API and opening that up to others. So when I say open banking in the corridors of, if they still exist in this virtual world, but the corridors of Starling Bank, what do people say?
I think that's a really valid question. I guess to provide a little bit of context on how Starling kind of views open banking. So we were obviously set up a completely new company, and therefore we don't have all those big legacy technology challenges that the CMA 9 have. And I think the great thing about starting with a blank canvas is really that we've been able to embed the open APIs in our technology infrastructure from the outset. So right from the word go, leveraging these open APIs to build the best possible integrations, to leverage them as part of our own customer experience and enhance our own proposition and our offering to our customers has kind of been always there. And then this open banking has been going on the side as well. And I guess how we see open banking is something that is a regulatory mechanism, and we very much agree with the sentiments behind it about driving competition in the banking sector. Absolutely. However, it's there more for the laggards, is how I would describe it, to pull them up to a certain standard. Starling is one of the innovators and is really pushing the boundaries of what's possible with our open APIs. So our main public API, which all of our integrations are currently built on, it's a spec that we defined, and it has received its exemption from the FCA for PSD2 purposes, but it allows, in our opinion, allows us to do a lot more. Why cap innovation? It's great that everyone's achieved a minimum standard, but we shouldn't cap innovation just because not all the banks can support it. So being in charge of this API spec ourselves allow us to provide more data and increasing the chances of being able to provide valuable propositions to customers, better quality of data. And, we're such big fans of it. We use it to power our own bank. So when we talk about open banking, I guess we're aware of it, and we're aware it's an important topic in industry. But it's almost like we've ticked that box and we're pushing the boundary and thinking about what else can we do and how can we go further. We're really led by customer want, much more than complying with regulation.
So it seems to be that a lot of the banks out there have actually implemented open banking within their own environments by creating their own challenger, as it were, like Yolt in the case of ING and a few others, where really they actually consuming sort of the bank APIs with effectively a subsidiary. Are the bank's APIs now? Let's talk about the large banks, and not just the CMA 9, which are 9 banks in the 9 main banks in the UK, but also in Europe. Are the banks now really able to provide their APIs to third parties, the regulated third parties, in a way that is frictionless? Does it work? Parth, you have a perspective on that?
Well, I think one of the important reasons for bringing in open banking was also to introduce security, because of screen scraping was a bit not secure for consumers. People used to get passwords, and they were using passwords on behalf of the consumers while accessing. So because of the security, there was a standard brought in called Secure SCA, Secure Customer Authentication. And in case of account information, that check has to be done once in 3 months. However, in case of payments, it has to be done for each and every payment. So I think that's one of the major frictions that we have in open banking, and that needs to be addressed. I think in the payment space, this has been realized by the players. Rather than making each and every payment to be authenticated, there are now some batch APIs coming in from the bank, so you can make a payment, one authentication for 50 or 100 payments. That is much more easier to do and much more practical. So that is being introduced. Then also in terms of SCA, banks used to originally demand for their own token or their kit to actually do the authentication for payment. However, now they are now using OTPs, and also the bank app itself using fingerprints to actually authenticate. So that is creating the ecosystem much more user-friendly, and slowly compete more and more with the other payment options of credit card, right? I think credit card, you can offer one-touch payment, but that is not yet possible with open banking.
Let's go back to the payment side, if I may, because I think it's an important part of also the promises of open banking is what's gonna happen in the payment landscape with open banking. But going back to some of the frictions and these APIs. So Starling is a new entrant in the market. creates its own API, absolutely. Now, if you are NatWest or HSBC, you have legacy environments, and you have to adapt somehow, and your backend systems. Now, in the UK, my understanding is that open banking has a very fixed API format, which doesn't seem to lend itself for much more creativity on the part of the banks. Whereas in the Europe, it's kind of a free for all. There's no PSD2 fixed format imposed by the European Commission. So what does that mean then? Does it mean that in Europe a bank is able to get to the level of an API like the Starling API, but in UK they can't? What does it mean in terms of implementation?
Yeah, I mean, let me talk a little bit to that. I mean, the first thing to say is the regulation sets out sort of, minimum obligations, minimum requirements on the banks. Regulators have been very explicit that they're not going to impose technical standards on people. I think that's right. There are various, different competing technical standards evolving. I think the important thing to think about from a regulatory lens is it puts certain minimum obligations on banks in terms of data they make available, the security protocols, minimum levels of security around that. And it's right that around that, then, banks and third parties have, scope to innovate and to, go beyond regulation. And we do see a number of banks going well beyond the confines of regulation, Starling being one such, and credit to them. But I think going
beyond. Do you see very large banks going beyond the regulator at this stage? Are they putting the budget into it to actually embrace the regulation in a way that the APIs become much more rich?
I mean, the short answer is yes. I mean, I think if I let's compare what the UK experience with that in mainland Europe for a second. As Andrea said, in 2018 there was lots of kind of toing and froing about bank API performance, availability, had they met the requirements and all that sort of thing. Kind of by the end of 2018, that conversation was done, give or take. Of course, is it perfect? No, but pretty much it's done. And then businesses like Swoop and many others have been able to, confidently build some fabulous services on top of the UK APIs. Kind of the same sort of thing is playing out in mainland. So bear in mind, PSD2 only came into full force in September 19. Was every bank across Europe compliant on that date? No, of course they weren't. In the same way that on the kind of go live date in the UK, not every UK bank was ready. Cold hard reality is that it'll take a bit of time, as we've seen with many other major changes in the industry. It'll take a bit of time for that to stabilize and to settle down. I mean, there's been some research published fairly recently about not just bank API availability, but bank performance, API performance. That will evolve. It's a moving feast, but the banks are on a journey. What we're absolutely seeing is a mindset change within the major banks from, for example, the first year or so, it's all about compliance and, kind of dealing with that. But very quickly, the mindset shifts from, right, what can we do with this asset? And you've seen various major UK banks launch services themselves using open banking, sometimes in partnership with fintechs, sometimes on their own. You're seeing various banks in various parts of the world. If they haven't launched them yet, they're certainly exploring, planning so-called premium APIs. And we expect to see, and we are seeing the same thing playing out in mainland Europe as well. The Nordics is at least as advanced as the UK, for example.
Yeah, I think if I may add, I think what banks are getting ready, and I think banks have geared up to the challenge, and I think 80% of the banks are offering these APIs, and we believe that more than 80% of accounts in Europe are covered by the major banks, because I think 80-20 rule applies, and I think a lot of accounts are available for open banking. However, just coming up with the APIs from bank is not sufficient. You need two more players. One is the fintechs or the TPPs, AISP and PISPs, to actually come up with application and innovative solutions which use this API and make it available to the consumers, be it individuals or SMEs or large corporates. And this is where the action is. I think this is where lots of fintechs and banks themselves are coming up with new innovative applications, which are in MVP, a minimum viable product state. That is, they are working, they are beginning to offer solutions. However, that is the promotion of that is left to the TPPs themselves. So that is happening slowly. People are being aware of this application, and they will start using them slowly and soon. But I think it will take some time before acceptance happens.
Parth, there are 4,000 potentially API standards. So what does that mean concretely? If somebody wants to access that, they are you can offer today. They are the technology exists today to offer a single API. Is that the idea?
Yeah, I think the issue is there are about 4,000 banks, 4,000 plus, the way you count them, but there are about 10 standards. Right? There was supposed to be open API standard, but there is no one standard. There is one standard from UK, there is one standard from France, one European standard for Berlin Group. However, banks choose their standard on their own, and they have their own interpretation of it. So, for example, you have one standard in UK, but it's not. Each bank has its own minor tweaks of that standard. So I think there has to be a lot of testing required. So there has to be 10 standards and 4,000 banks. You need to test that. So that is where to have a pan-European solution, which would be really useful for large corporates and SMEs to do really use APIs on pan-European basis. The testing is required. The API integration is required. So I think there is activity happening to actually offer an aggregation API, one API which will cover. But I think
absolutely agree with that. But I mean, therefore, there is a market that has evolved of aggregators. Mastercard is one such. There are many others who are basically doing the heavy lifting, if you like, of that last mile connectivity. It's more like 9,000 banks across Europe if you want full coverage. You know, doing the heavy lifting of building those connections and then presenting TPPs with effectively a single API front end to deal with. Frankly, freeing up and empowering the TPP, their engineers to focus on building those brilliant services, not worrying about the plumbing. Because I completely agree, this is all about the services. It's not about, and frankly, if consumers and businesses alike never hear the term open banking, that's perfect.
Yeah.
Yeah.
So on that, our experience is that we integrate with an aggregator, so that solves the issue in terms of the differences in APIs. Number one on my wish list is more standardization of data formats. It's a real issue. Data quality, data formats is kind of the thing that keeps us awake at night. There's a lot of work that goes into that, and that was probably the biggest revelation for us in 2018. I think we're pretty naive when we started off thinking, yes, this will be, standardization across data formats, and it's not been the case. So a lot of investment, even with us using an aggregator, their focus in terms of data normalization has been more centered towards the consumer market, which is where most of them are spending all their time, whereas the business market requires completely different standardization. So
great segue to my next question. Sorry, Andrea, is I'm conscious of time, and I wanted to cover the payment side. So it seems to me that a lot of the visible applications of open banking today are about effectively replacing in a more efficient way the screen scraping technologies of the past around account information. Was not super clear. Maybe one of you can address that at some point. Is does it go beyond the current account? Does it touch the credit card account, the mortgage account, the crypto accounts, and so on? But the account information seems to be a well-mastered sort of technology. Payments is the interesting piece here, because we mentioned AISP, which is the regulation to be able to access account information from the banks, and PISP, which is the ability to initiate a payment on behalf of a third party. And to your point, Andrea, that third party should be a business, because there's a lot of demand in the business world to change the payment landscape. So to put it simply, merchants pay a lot of money each time a transaction is being done in their online or physical store. There's many intermediaries involved. There's an acquirer involved. There's a Visa, Mastercard, American Express involved. And now open banking has opened up the promise of change in the payment landscape. Is that going to happen? Is this happening?
Yeah, I think it is the direction in which people are moving forward. I think the Visa, Mastercard, and American Express with the tokenization and NFC payments has some edge currently in terms of user experience. But however, in open banking, you need to have one secure authentication for every payment, and that is where the hitch is currently. I think that journey has to be simplified. I think with the advances in the SCA authentication by app-to-app flow kind of operations where you can use the bank apps to authenticate, that will streamline the whole operation. I think payments are pervasive, right? Payments are everywhere. Every transaction has a payment. Every business, buy a product or a service, there is a payment involved. So the payment offers payments through open banking offers real opportunity for innovation. And I think the online, we believe that consumers will start using payments more quicker. One-off payments is fine. However, the merchant payments, online payments, and business B2B payments is where challenges. And I think that is where, if the SCA problem is tackled, then that will become much more streamlined. And we are working with some corporates and SMEs to streamline that end-to-end flow for the corporates to make the payments work in a smooth manner, efficient manner. I mean, everybody loves the Uber payment experience because there isn't a step in for payment. It just happens. That is the kind of panacea or objective we want to achieve. However, that will not be fully possible, but with some secure authentication, we should be able to achieve that. And I think that will happen in next couple of years. Not yet, but the industry is moving in that direction.
Yeah, I think at the moment most of the volume in Europe and UK and Europe is, as you say, AISP related stuff. Payments is lagging. I think to your first question about use cases, yes, there's various sorts of things flipping from screen scraping to using the APIs, and that's not limited to consumer applications. That's absolutely true for kind of various business applications as well. But actually, there's a lot going on in the lending space. Both new lenders and traditional lenders starting to leverage open banking data to help inform lending decisions and so on. And that's clearly a very valuable AISP use case, if you like, that plays very well to things like financial inclusion, improving access to capital for small businesses and so on. And we think that's a very, very substantial area. But coming back to the payments point, typically open banking, when it comes to payments, is about making it easier to use real-time account-to-account payment services, things like faster payments in the UK or SEPA Credit Instant in the Eurozone, for example. And there are multiple use cases for that. Some of those absolutely compete with person-to-merchant card transactions. We have a lot of activity with various customers who are wanting to use that for things like wallet loads, making it just transactions that are already happening account to account, but using the open banking rails just to make the user experience better for the customer. So, and similar sorts of bill pay type use cases as well. Again, transactions that would already be in some form of account to account service, but the providers are wanting to make it easier for their customers to make those payments. So I think there's huge opportunities as well for business in invoice creation, completely digitize their receivables files and make it easier for their customers to make payments. And I think that's where the focus of open banking payments is likely to be. Absolutely, there'll be some person-to-merchant type stuff, but I think it's a false choice to think that it's just about substitution of a credit or a debit card payment.
Yeah, but the consumer won't care too much, right? Whether, how they pay, as long as it's a smooth payment experience, they're good. So it's more on the merchant or the business side of things that they're going to start to pay attention to the cost savings. The question. Let's
go up to a point, Alain. But think about, for example, in COVID era, lots of airlines have gone under. If I've made the payment of my air ticket on a credit card, I'm protected. If I've made my payment through an account-to-account service, whether triggered by open banking or not, I'm probably not protected. At that point, the consumer suddenly will care a lot. And I think as an industry, it's important that we actually make sure the right protections are in place for customers. And the bare bones regulations don't really do that, in my view. So that's an area where I think the industry has to come together to put, if you like, capability in over and above the level of what regulation requires. Because when customers care about payments when it goes wrong.
I agree with that. But then the question is, what can be done beyond the regulator, as you suggested, around chargebacks and refunds, so that both wins? The consumer is not worse off in its experience, but the merchant is actually paying much less for the benefit of actually accepting a payment. Because at the end, it seems to me, unless the panel disagrees, that the merchant will want open banking to work in the payment space, if anything, because it will reduce its cost of payment. Is that a fair assumption?
That's one of the, I think, idea was to introduce competition, right? So I think competition to credit cards and competition to banks. So I think that objective has been, that was the objective and it is being achieved. However, there are some use cases which are not fully ironed out. So for example, refunds is not supported under open banking. However, there are initiatives happening where the newer versions of APIs and standards emerging, especially in UK, which are addressing refunds, which are addressing batch payments. So these use cases will also fall into the purview of open banking. And I think one of the issue from a merchant side is that compared to credit cards, that you get instant payments. So in case of web shops, not perhaps the security of the refunds, but from a web shop payment point of view, merchant point of view, open banking does offer them instant liquidity in COVID-19 situation, and also offers them various options for recurring payment, installment payments, which they can offer to consumers on a very effective manner. So I think there is competition being created by open banking. However, open banking still lags behind the credit card based solutions which are in operation for the last 25-30 years. So, but I think it will take time, but there is a lot of opportunity and prospect in innovation in open banking.
So I would like to ask the panel, going back to the main question at the end of it all, is open banking seems to be working in terms of the technically there are things that are out there that people can touch, can see, and works. The main question I have now is around the aspect of innovation and competition. So when you talk about financial services in general, you think of competition as, okay, TransferWise competing with the traditional money transfer business. You think of a neobank like Starling Bank or Revolut competing against the traditional banks. So you think about these guys, but they've been around before open banking, or they started their journey before open banking. Open banking was not on the critical path for them. So open banking is going to create innovation and competition really in the next, I'm not talking about the next 10 years, but the next 2 years. I'm going to see more Swoops type organizations out there.
Yes, absolutely. Of course you are. You'll see Swoop get bigger. We're operating already in Europe and just have entered the Australian market and following, for example, in Ireland, because the banks in Ireland were also have UK entities. They followed open banking, so we're literally following the open banking trail. Mexico, for example, is now looking at the standards of the UK. Yep. So geographically, you're going to see expansion. You're going to see more GPs like Swoop emerge, and I just think where we're moving to behaviorally, particularly for businesses, which in the past have been very apathetic. There has been zero competition in the UK banking industry up until a couple of years ago, and you have the Starlings emerging now, and you have businesses now looking at Starling as a genuine replacement for their traditional bank. As Starling starts to build out its marketplace, it's able to offer the depth of products that traditional banks have offered. So we're seeing ourselves, even in the lending space, as Jim spoke into, the number of niche products that are emerging in the market because of the improved data and real-time data. You have new propositions for e-commerce, for stock finance, and you have a lot of cross-border lending going on now. So where traditionally it was a lender would only lend in the UK to a UK business, we now have lenders across Europe and in Australasia who will lend on invoices regardless of geography. This all relates to data portability and secure data portability. So anyone who thinks open banking and PSD2 isn't working or doesn't have a future, frankly, stands as relevant as Donald Trump. It is happening, and it's only going to improve. And I think what we're going to see is we're over the basic elements. Now we're into strategically, where can this go? And once a bank or any participant is thinking of this from a strategic and a profitability and economic question, that's where the mass adoption is going to start happening, I think.
Awesome.
Yep.
Thank you so much to the panel. Sorry, we at the end of the main stage time allocated, but we are going to go back for we are going to be back for questions, so we can continue this debate in 15 minutes. I would like to bring Ben Brabin back to the main stage and wrap up this first session and talk through the rest of the program. Ben?
Thank you, Alain. Thank you very much. And thank you to the panel. Everybody else, we now have 15 minutes to make those questions ready, or make a cup of tea, or both. We've heard about trust. We've heard about reliability. We've heard about refunds. We've heard about questions of stability. But I guess, of course, there's plenty. We've even heard about Donald Trump there, snipped at the end. There's plenty for you to bring to this fantastic panel. So you have 15 minutes. Please rejoin us in 15 minutes to address your questions on the future of open banking. It has already taken flight. We have Starling, we have Pelican, not only flying, but swooping. But what does the future hold? Come back with your questions in 15 minutes. Thank you.
Want access to more CogX videos? Subscribe now for free at cogx.co.